Welcome to Lesson 8 of the Strat course. Since we just covered broadening formations, we are going to cover tightening ranges, which is the opposite of a broadening formation. So when we talked about broadening formations, we discovered that they have higher highs and lower lows, and price is expanding. And when you're learning price action, it's important to recognize what kind of price action you're trading, because the market is usually going through price discovery and a series of broadening formations, or it's consolidating, or it's trending. When we were talking about broadening formations, we know that they look like this. Price is expanding and getting bigger. Well, when you have a tightening range, price is doing the opposite and it's getting smaller. So a good way to identify a tightening range or consolidation is you have lower highs and higher lows. Okay, this is what we call the no-no zone, which means you don't want to trade when price is within this pattern. And a little fun fact on tightening ranges is on a higher time frame, they are an inside bar. So if you go to, let's say, a 2-hour chart, so you had double inside 2-hour candles. So looking at this, you have your low and you have your high, and price has been stuck in this range the entire day. So what do you do? How do you play it? Well, you want to mark out your higher lows and your lower highs. So that was your previous high. This is your next lower high. This was your previous low. Here's the next low. And then you have this low as well. So you have this tightening range, right? Low, high, higher low, lower high, higher low, lower high. So you only want to trade this when this pattern breaks. So you would have to break a low in order to trade it, or you would have to break a high in order to trade it. Okay, so again, you will get chopped up in here. Things don't hit target. So this 2 down, 2 up reversal couldn't hit its target because you're stuck in here. All right, let's see what happens. So this is what happened at the end of the day. We finally broke the pattern of a higher low, and then that's when we got the flush. So again, you can go to a higher time frame if you want to play this, and you would wait for the strat setup, which is an inside bar and down. And it couldn't even take out its real magnitude of a new day low. But this is how you play it. You don't want to play it while it's in here. And this is consolidation. It is an equilibrium. It is market indecision. The market doesn't know what it wants to do. This is the only pattern you'll ever see me draw, which is a symmetrical triangle. In technical analysis, it's a symmetrical triangle. And the reason that I like it and I use it and I play it is because it's not biased. Because we know on a higher time frame it's an inside bar, and we know still what our actionable signal is. And if you remember from lesson 1, when we talked about what is a 1, what is a 2, what is a 3, a 1 is described as consolidation. So this is how you want to handle these. You don't want to trade in the no-no zone. You want to wait for the break. So if you identify a chart with lower highs and higher lows, go up a time frame or two till you can find the inside bar, because I guarantee you it's there. You just have to find it, and then you can mark your level. So for instance, we knew on the 2-hour chart that was our level to go short. So if we go to, say, a 15-minute time frame, You're going to see there's the break. That is the 2-hour inside and down break. In the strat, you will hear people talk about mother bar problems. And all that means is you have a big first candle. So this would be considered a mother bar. And all it means that price is stuck inside this big candle. So this is what we call mother bar problems. So you want to be aware of that and that you're trading basically a giant inside bar. But when the setup comes, you can take it, and the goal is to take out the low of the mother bar, because otherwise you run the risk of mother bar problems and staying inside all day. And another example of why we don't trade inside days, because that's the no-no zone. So if you look at this chart, you're going to clearly see you have a high to a lower high, you have a low to a higher low. So it's important to train your eyes to see these things so you know when to trade it or not to trade it. So this is what you would consider to be a symmetrical triangle. And over time, as you practice trying to identify if you're in a tightening range or a broadening range, what you can do is try and candle blend, which just means you kind of add these two candles together in your head. So you'll see you have this candle's low to this candle's high. So you can imagine that is one candle, and then you can combine these two candles together. So do you see how this candle fits completely inside the bigger candle? And then now you have another candle. So it's just kind of training your eyes and blending to see a different perspective. If we went to a 2-day time frame, you'll see that we're completely inside this 2-day candle. So the way to trade this is you have double inside days. So tomorrow, this could potentially trigger a what? A 2-1-2 down that could finally get it out of this mother bar. And that's why inside day break plays work, because there's consolidation happening inside of this range. This is consolidation. So the market hasn't picked a direction yet, but when it does, everybody's pretty much kind of on board. And again, like I mentioned in the last episode, get used to finger doodles, because it's not the lines that we care about. It's the price action, right? We only care that we have lower highs and higher lows. And when that breaks, that's when we want to join, not before. So don't diddle in the middle or play in the no-no zone. All right, catch you on the next one.